Light FM. Pat Benatar there. Morning Dave here. Grateful for you being here with me. 21 years now going strong. I'm proud to be here with you, and I thank you. It's 8:42 now, 18 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And it's time to check in and find out what's going on Wall Street this morning with my friend Philip Statler from Statler Financial Services in downtown Sebring, the home of Shred Day tomorrow morning. Philip, good morning. Are you all pumped up to help people with boxes and the like?
Hey man, I'm trying. I'm trying to just get organized and make sure I get everything where it needs to be tomorrow.
It's always fun down there. I got the light duty, show up with a microphone and yammer for 4 hours, but I'm looking forward to it. Down across the street from First Baptist Church off Mango in downtown Sebring, easy to get to. Bring your important papers along. If they aren't needed at home, they ought to be shredded up, and that's what we do for free once a year at this time. And we're starting out early tomorrow for folks that are used to doing 10 a.m., aren't they?
Yes, sir. We're trying to beat some heat, get out a little earlier. And we found last year and the last couple of years, that last hour seemed to drag on. Not many people showed up. So we said, well, let's move it up an hour because we always get people there early. So we're going to do it at 9 o'clock and we'll go until 1 o'clock. So that will be our time frame tomorrow.
Sounds like a plan.
You there, Dave? Hello? Hello, hello.
Oh, wait a
Oh,
minute
there
here.
you go. There you are. What'd you do? Push a button?
I think I just made a button push. I don't know what happened. I swear I didn't touch the console any, but I disappeared on it. Dow was up 144 yesterday. S&P was up 39, and the Nasdaq was up 201. And all that in the face of President Trump getting into another snit about Canada buying television ads, quoting President Reagan as being opposed to tariffs. Evidently, we had some decent news overall yesterday on the earnings front that made things improve. Then we come up to this morning, and we actually get some government data to start the morning out. The Consumer Price Index got issued. Couldn't have anything to do with the Social Security COLA, could it?
Well, we got to make that calculation. We got to make it pretty soon so that they can make the adjustments across, the hundreds of millions of people that get Social Security.
Add that to the fact that every government official that gets elected to office, first of all, has to go through a lobotomy that removes all semblance of courage as far as senior citizens are concerned, and they aren't going to screw with our cost of living increase. Official top-line CPI report from last month, annualized 3%, core 3.1%. Now, it's not good because it's up from 2.9% last month, but they, I gather, expected more than that on the top line CPI, huh?
Well, on both, Dave, you misquoted there. Sorry, but both the core and the top line were 3%.
I had 3.1 on my first release. Okay.
No, 3.1 was what was expected from both of them. And when we look at the top line, Dave, I didn't realize this. I was just not looking at it. It's actually an increase from the last month. The last month it was 2.9.
Right. That's what I said. It was up from last month from 2.9. Yep. So we have a slight increase on inflation, but still underachieving by a little bit what the economists wanted. And I gather that's kind of making the interest rate watching mavens happy this morning, isn't it?
I'm sure it is, Dave, because that's going to add one more, little thumbtack to their, hey, let's lower interest rates. But the other thing the Fed has, I was reading an article this morning that, we are having some issues when it comes to liquidity. And so the Federal Reserve, it looks like, is starting to back off on their quantitative tightening.
Ooh.
They are going to not be, looks like to me from this article I read anyway, that they're going to stop reducing their balance sheet because they're putting some pressure on banks that the what do they, listen, I'm trying to think what they call it. The bank reserves
Hmm.
last week fell below $3 trillion, and that's not what they want to see. So they are going to basically halt the quantitative tightening, um, at least for right now.
And actually, when you think about it, even on a macro sense, without looking at a specific industry getting into some difficulties, that probably makes some sense. Last month, we were both saying, okay, we don't want to communicate a 0.5% rate decrease as far as the reference interest rate is concerned, because that sends a message that we're in deep doo-doo and we aren't necessarily there, but we do need a little boost. So they slacked off a little on the tightening and started to loosen up the balance sheet. Now we're looking at virtually a slam dunk of another quarter point interest rate cut this month, quite possibly another one before the end of the year. And we have a possibility of getting a little bit loose looking at persistent 3% inflation figures.
Yeah, so I mean, I think that's going to, hold off on them. They're going to hold off on reducing their balance sheet anymore,
Mm-hmm.
which had ballooned significantly during COVID.
Yeah.
So yeah, so that's one more thing that'll quit taking some money out of the money supply and will help as well as lowering interest rates.
Absolutely. It's hitting that sweet spot. And those are the only two levers they really have as far as money supply, the reference interest rate and the amount they retain on their balance sheet. And you don't really want to put the pedal to the metal on both of them because they've got that twofold job. Number one, support the jobs market, and number two, try to keep inflation under control. I still think we'll see 2% when Santa Claus does the tango with the Easter Bunny. But if we could just hold it at 3% or a little under, I think I'll probably be happy with that. And I'm starting to think the Fed might have thrown in the towel on their 2% dreams as well. Other stuff going on this morning. T-Mobile lifted their annual forecast. We've been talking about how subscriber losses on postpaids for the other big cellular companies have been giving them fits. T-Mobile actually said they're going to gain some more subscribers. That TV campaign they're running is evidently doing some damage, isn't it?
I guess so. I mean, that's one of those things that subscribers are important.
Mm-hmm.
And hey, man, if you can get it on the prepaid market, then that's the, you want to get it from wherever you can at this point.
Absolutely. The only big, really headline news item from yesterday that made the hourly news was the story about President Trump in Canada. Canada's been running a bunch of TV ads across the northern tier of states with a quote from President Reagan. Talking about how he didn't like tariffs. Well, okay, Ronald Reagan was a free trader, so that makes sense. That really has President Trump hacked off, and he called off all further negotiations with Canada over tariffs. I fully expected to wake up this morning to the futures absolutely in the tank, but I guess we're getting kind of used to the notion that we do a lot of bloviating and really don't do too terribly much because we were mostly above the zero line all night on the futures. We didn't get scared very much at all, did we?
No, no, we didn't. I mean, we're getting a nice bump since the CPI came out.
Yeah,
Um, hey, get this, just came across my ticker. Social
yeah.
Security Administration announces the 2026 COLA benefit, drum roll please, will be 2.8%.
Well, which means my Medicare premiums are going to go up by 2.9%. Like I
Hey,
said,
the other thing,
Santa Claus and the Easter Bunny. I believe in both. Yep.
Target cutting 1,800 corporate jobs. First time in 10 years they've had a major layoff.
Woo! Most companies are cutting back on their blue and pink collar forces. Target's cutting back on the executive staff, huh?
Well, yeah.
Wow. We do have some companies reporting in the process, and you and I both kind of giggled when we said this. Since the government's the biggest stockholder, we've all got a stake in it. Reporting season continues. How are we doing with Intel?
Intel, they beat on revenue pretty well. They earned 23 cents a share adjusted. Now, the issue is that we can't compare that with what the analysts threw out there because they're just not comparable numbers. So there's really nothing to compare that to. Um, but I will tell you that Intel, not as good as it was. I mean, it was up when I first looked at it this morning, and their numbers came out. They were up 8% this morning.
Wow.
Now they're up about 5.3%. So still up, not as up much as they were about an hour ago.
I'm finding the entire sector fascinating these days in the high tech sector. Yeah, the government's bought into Intel, but then we've got Nvidia buying into that. OpenAI is into the mix and whatnot. They're all buying each other out. Before too terribly long, we're going to have one stock, call it big tech, and that'll be about it.
Hey, Ford, we got GM earlier this week. We got Ford came out. They did well. They came out at 45 cents a share versus 36 cents that was expected. So that was some good news there. Revenue substantially ahead of expectations, like by $4 billion. So so some good news there on them. They're trading up about 3.5%. The other thing I saw was that they are really going gangbusters on their F-150s again. As a matter of fact, they've reallocated some of their employees from the EV division over to the truck division. So they do have one little fly in the ointment. Remember, we talked about a couple weeks ago, maybe a month ago, that
Hmm.
they're one of their suppliers had a big fire, and so
Yeah,
that's kind of slowed down some of their supplies they need to finish the project. But Ford seems to be doing well.
good to hear. What else have we got out there?
So we've got a couple of comfort systems, which is the AC manufacturer. They did well in the third quarter. They even increased their dividend. They beat by over $1 a share, almost $2 a share in earnings. They're skyrocketing this morning, up almost 18%.
Wow. Well, it's been a hot summer down here down south. I suppose they're doing well, right?
Yep. So I found one loser for you.
Okay.
Decker's Outdoor. Now they're the maker of UGG shoes and Hoka shoes. So they fell real short of expectations on revenue. And so they are trading down today 12.75%.
Wow. Well,
Yeah, they've fallen from 102 to 89.
let's just let that one sit and go to the summary. General update on the equities market yesterday. After a big report this morning, I see a straight line upward on my delayed quotes this morning. 45 minutes early. What are we looking at?
Green ink on the index side, on the stock side for sure. Dow's up almost a half a point. The S&P 500 is up 0.6. Nasdaq 100's up a little over 0.8%, and the Russell 2000 is a big winner, up 1.33% right now. So big moves on the stock index. On the other side, however, we see some red ink. Silver down almost 1.7%, below 48 to $47.89 an ounce. Gold down 1.3%. And then crude oil flat right now at $61.78 a barrel.
I did double check it. Yeah, that's the world markets responding to us penalizing countries that are buying Russian oil, and they figure that means a shorter supply, so a bid upward in the
Ah,
price.
gotcha.
I
There we
guess
go.
guessed right yesterday for a change. Overseas market, Asian Rim, generally green overnight. I don't have any red ink except Australia had an off day. Other than that, the mainland Chinese markets were up about 0.75%. If I go over to Europe, there, I've got tab problems too sometimes. Kind of a flat day. One of the major European average indexes is dead flat. The other one's off by about 0.2%. Mixed bag across the continent this morning. Somebody wants to get some action on their retirement plan they can actually count on happening. That takes an expert pair of eyes. How do I find you to retain your eyes, sir?
Then they can give us a call at 863-382-0037 to schedule a core retirement analysis. That's a half hour, you and I on the phone, making sure you're on the right path to the retirement you dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM. And hope I'll see everybody tomorrow morning at 9 o'clock.
Absolutely. You and me together again next week here on the radio, and I'll see you tomorrow morning at Shred Day, sir. Have a good evening.
All right, mate. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Bye now.